All right, let's get back to our continuing coverage of the markets today with Israel's attacks on Iran, leaving investors feeling unsettled. The mood of the market recently had been more favorable. I just talked about how the Canadian stock market's been trading around all-time highs. And think about in the U.S. how equities have surged after the initial trade uncertainty post-Liberation Day. Let's bring in Sam Stovall, the chief investment strategist at CFRA, to get his perspective. Sam, it's great to see you. I'll just add before we get into it that I've already spoken to a couple of investors this morning that looked at the selling pressure in the market, felt like it wasn't tremendous selling pressure, and felt like they weren't going to shift away from feeling bullish about stocks. Sometimes it's hard to know where a geopolitical story is going to go, but what's your initial response to where the markets have gone this morning?
Good morning, John. Well, I would tend to agree. When I first looked at the futures and saw that they were down less than 500 points on the Dow, my feeling was that, investors must be looking to history, which traditionally says that the market movement after a military shock tends to be shallow and short-lived. And that's the expectation that we have seen initially. Also, I think the question is, would Iran do something that's going to adversely affect their economic position, in a sense, by shutting down the Straits of Hormuz, et cetera? So I think while we still don't know what the retaliation will likely be, I think Wall Street is essentially saying that, yes, this could trigger a digestion of recent gains because most technicians believe we are in an overbought situation in the U.S. right now, but it will not derail the bull market.
And, I guess all of the market moves ultimately could depend, to your point, on how all the players in a story like this decide to act. We just had a conversation last hour about, where oil prices could go in an environment like this. And we spoke to a geopolitical expert who said, well, if we don't see a tremendous escalation from here, and again, there's very little we can say at this point. He wouldn't be surprised to see the premium that has been enjoyed by oil prices today to quickly reverse. And then if things were to escalate further, he wouldn't be surprised to see oil prices continue to climb. I do wonder, how closely would you be watching oil? Because oil obviously creates a lot of considerations on a number of fronts, whether it's, what's happening with the economy, what's happening with inflation, all that kind of stuff.
Absolutely. Well, our base case remains $65 per barrel for WTI for 2025, rising as we move into 2026. Our feeling is that the overall outlook is still questionable for the energy sector, but because of the potential for an oil shock, I think we have to be very careful because, as you said, should the Iranians decide to try to cut off shipments in the Straits of Hormuz, then that could push oil prices at or above $100 per barrel. If this oil shock does tend to last longer and be sharper in its price response, we're reminded that many recessions in the past have been triggered by oil shocks, because if you do see a tremendous increase in oil prices, what is it, for every $10 increase in the price of oil takes off about 10 to 20 basis points from real GDP. So high oil prices could end up being a bit of a lid on economic growth.
Well, and I guess for investors who are trying to make the math work or figure out where things go, just a reminder that energy stocks themselves have actually lagged a lot of other sectors this year. So people are looking at a higher oil price this morning, and that has prompted investors to buy some of the energy stocks. I did also want to just talk about the profit picture, because at CFRA, you guys keep close tabs on what the earnings outlook looks like. We actually had a conversation with one of our regular guests, Barry Schwartz, earlier today, who noted that in light of the fact that there have been so many points of uncertainty this year, before we were talking about this geopolitical tension, we were talking about trade tensions, that when he looks at some of the earnings estimates for S&P 500 companies over the next year, that you have been steadily seeing the earnings expectations rise. And I do wonder what you think about, the profit picture or the expectations amongst analysts on average, seeing an improving profit picture in the face of what people see around the world, which is these headlines that are negative all the time?
Well, actually, I guess it must depend upon what time frame you're speaking of, but we're actually seeing the reverse. At the end of 2024, S&P 500 estimates for growth were at close to 13%, according to S&P Capital IQ consensus estimates. Now that number is a shade below 7%. The 2026 number has remained fairly static at 13.2%. So maybe the 2026 number is seeing an improvement because of the weakness in 2025. But I would basically say that there is real question as to when we're going to be turning around in terms of upward revisions for the S&P, because we're still trading at about a 22.5% multiple on the S&P, which is a near 20% premium to its 10-year average.